Had on watch the things that I mentioned pre-market, how they panned out, and we can get into that. So do you guys have anything you want me to go over? You can ask me anything that I can hopefully help you with. Trader Boy, what's up? Captain Ramen, good morning. Corp Free, good morning. Opro, what's up? Small Green, great job, Opro. Any green is better than any red, right? Any green is better than any red. I think we can all agree on that. MR8 says green means taxes. Two things in life you can't avoid, death and taxes, right? Miko, this AXSM move lately has been nuts. Let me check it out. AXSM. Okay. Yeah, this is... Okay, so what I first want to do is I want to always start off on the 1-year chart. And on the 1-year chart, I see it's at all-time high. So this tells me right away this is not the easiest short. Doesn't mean that it's not a short. It's just, you know, when we're looking at stocks, first let me say this is just my approach. But when I'm looking at stocks that I'm looking for whatever respective bias I may have at the time. In this case, and in most cases, I just gravitate towards the short side when we're speaking about small caps, right? This is at 15 and change right now. But the first thing that I do is I always look for the macro relative strength or relative weakness. Okay, I want to look at the 1 year. That's where I always start my analysis. When I type in the ticker symbol, look at the 1-year chart. Where is the stock in relation to its 1-year chart? And in this case, it's at all-time highs. So that tells me right there, red flag for the short side. This is breaking out. It's front side. It's it checks the box of relative strength on the macro side. Now the next step for me is to pull up a 5-year chart. Okay, and on the 5-year, I could see that the high was 1574 back in 2016. January 5th, 2016, that's what my TD Ameritrade chart says. 1574 was the high. So that's what I'm looking at on AXSM. Now, what does this chart tell me right now? It tells me that it's going much higher. I don't see any resistance. Okay, now let me pull up even more. I'm trying to go to a 20-year. It's not letting me. Let's see here. It's not letting me go to a 20-year. Looks like the most data that I can get out of it right now is a 5-year. It's a 5-year chart. It won't populate beyond a 5-year. So that either means that my TD just won't load, which happens sometimes, or it means that there's no data before that. So regardless, doesn't matter which one it is. Regardless, in this case right now, on March 25th, 2019, what do I see for AXSM? That it's going to break into new highs. It's going to break into new 5-year highs very soon. Why do I say that? Because there's no overhead resistance anymore. We're sitting at 1554. The 5-year high is 1574. Okay, now unless something happens, some anomaly happens that we can't foresee with technical analysis, this is probably going higher. Okay, it's not 100%, but if I were to say, if someone were to ask me about the probability of it being, you know, a bullish trend, bearish trend, I would say that this is very bullish. Why is it very bullish? Well, not only are we at 1 year all-time highs, we're at 5-year all-time highs. And there's no overhead resistance above this point. And if you break it down even further, so that's macro, okay? If we break it down into the micro, we see that it's 11 a.m., okay? And you guys know that we talk about time frames sometimes. When we're looking at relative strength and weakness, we have to look at the time frames. If it's past the open, where 70% of the volume statistically occurs, and about, you know, it's hard to give an exact number, but at least half of the business in the trading day is done within the first 60 to 90 minutes. I think that's safe to say. It's not exact, but I think as a general observation, right? So if we have that push into 1544, which we saw, and then a big sell-off, and then a VWAP reclaim, grind it up all the way near its highs, put in a new high of day, and it's 11 a.m., it just is another check mark in the box of relative strength. So when I'm looking to gauge the strength and weakness of a stock, I'm looking at a mental checkbox. Okay, I have the left side of my analysis and the right side of my analysis. The left side is relative weakness and the right side is relative strength. So this is checking all the boxes on the right side, meaning relative strength. Okay, from a macro standpoint, it is at 1 year and 5-year all-time highs. Okay, from a micro standpoint, it's intraday today, March 25th. It's at highs. It's floating around the highs, right? So how do I gauge relative strength intraday on a micro? I say, well, is it just really simple, right? We could just very objectively look at it. Is it at or near highs, or is it at or near lows? And this is at or near highs. It's actually 1562, so it's 6 cents away from the high. That is a huge flag, you know, to not be on the short side, at least in my approach. So like I always say, guys, my way is not the best way. My way is not the right way. My way is just my way. Okay, it's the way that works for me. I'm a guy that has gotten absolutely steamrolled on the front side shorting. So what was once my biggest weakness has now turned into one of my greatest assets. Is I have so many rules for identifying front and backside. And of course, nothing's 100%, but I'm a pretty good gauge of where a stock is in its trend, and I've become pretty good at identifying front side, backside, and that's only through years of failure. So that's what I want to pass on to you guys. That's my analysis. AXSM on the macro side, 1 year and 5-year highs. On the micro side, we did have a sell-off mid-morning. It reclaimed, grinded to new high of day. The probability that it's going higher to break out into 5-year new highs is very high. And the probability that it's just going to dump is pretty low. So when I'm looking to short a stock, there's you know, there's an argument to be made on both sides. There's an argument to be made that this is strong or this is weak or whatever. But there are easy shorts and there are very difficult shorts. And why would I try to swim against the current, being a little old tiny retail guy that's not even a blip on the radar? Why would I try to swim against the current instead of riding the wave? You know, you try to be a hero on stocks and you get wrecked. You know, and it doesn't matter what your bankroll is. I don't care if you're an 8-figure trader, if you are constantly swimming against the current, you're either going to lose a shitload of money, or if you have a really big bankroll, then you're going to be unrealized a large amount of red before the stock goes in your favor. And either way, there's an argument to be made, why even bother? I mean, I know, you know, eventually it may come down and work for you, but do you really think it's feasible to be 50K, 100K, 200K, 300K in the red before it works out? I mean, that's for the big boys, you know? I mean, so obviously what they do works for them, but I'd still, if I get to that level one day, I still would rather avoid that, right? So these rules are kind of universal, you know, whether it's $200 or 200,000, I really don't feel like in my own career, I don't want to be attacking early. JSpec says, you can't cheat the rules. I feel like it fuels bad habits. Short Bear says, greed can be bad. If you broke rules but are green, is it good? So that's actually a question that I asked a few months ago. The Short Bear's repeating something that I said. It's pretty cool that you remembered that, actually. I asked a question to you guys a while back, and I said, if you broke rules but you're green, is it a good day? I'm going to ask you guys, if you broke the rules and you guys are green, is it a good day? I don't think so. Now, why don't I think so? Well, because it's just, you know, the market is about longevity. It's about a consistent, proven process that will carry you for years in your career. So if you get lucky one day and you end up green, you can't jump for joy. You really better get back on track quickly, because eventually luck runs out. You know, it's actually a proven systematic approach that carries us. It's not luck. You know, and what's really crazy about the market is that you can make money being wrong for a long time, and you can make a lot of money being wrong. That's what's so deceiving. You know, so this is why in my own approach, I always stress a proven systematic approach. Proven, what does it mean by proven? I want a very large sample size, 500 trades to start. Okay, I want to name my setups. I want to prove objectively. Okay, you guys know what objectively means. It means without a bias. I want to look at my data and I want to say, I want it to tell me objectively that this is consistently working. And I also want my approach to be systematic instead of dynamic. I don't want to just shoot from the hip when I see a chart. I want to have a systematic approach. Now, what does systematic mean? Systematic, in a nutshell, means if-then for you coding nerds. If-then. If the light turns green, I go.
Nice job, dude.
If the light turns red, I stop. That's an if-then systematic approach. And that's what I base my whole trading off of, is a systematic approach. So AXSM, not really something I'm interested in, because I want to let it run first, and then maybe it'll be something that I look at in a couple of weeks. Okay, so I want to talk pre-market. Everyone knows my main play today was CRIS, C-R-I-S. And in pre-market, I originally said that I had a 314. You guys can go back and look. I also posted it on Twitter. I also said that, I said that 314 area was really the key resistance. Now, what happened? Price topped out at 3 and it dumped. So then I revised my analysis, because my analysis is based upon price action. So you guys know that I'm a math-based trader. I make calculations based upon movement and volume. So after the stock dumped, I knew that there would be a resistance level before it got to that 314 area. So I said in the room, and I said on Twitter, 283 was the next level for it to fade. And then if it can get beyond that, 314. And in pre-market, we spiked up to, let's see here, 289. So 6 cents above what I thought it would stop at. And then it dumped, it collapsed. Okay, so you guys are very curious about my my math-based approach. I share it every single day in the room. I share my analysis for everything. After that 283 area came into play and business was successfully done there, I said that the next level that we have is 266. And that is still the next level that I have for short on this. I know price is at 194. You know, a lot of people nailed it. If they just slammed it and held, that's great. I'm really happy for them. That's just not my approach. I cannot chase it down here. I can't chase it down here at all. Okay, for me, that would be a huge disservice to my trading as confirmed by the data. Someone said 500 examples is too many. I start to get excited after I see like 100 examples maybe. You know, 10 examples means nothing to me. If I see 10, 20, 30 examples in the market of a setup that I'm tracking, I really am just not holding much value in that. But when I start to see like 100, you know, we have a pretty good reward to risk and win rate, pretty good expectancy. That's another thing. You know, you can have like, there's all different forms of speculation, right? You can have a very high win rate system with a 1-to-1 reward to risk. You can have a lower win rate system, such as 30%, 40%, 50%, and a very high reward to risk. And that's actually where the big money is made, believe it or not. And it's also important to understand the expectancy and the other factors in your approach. If it's something that you see a few times a week, great. If it's something that you see more than a few times a week, even better. But if it's something that you see once or twice a month, that's not really feasible to run a business off of, in my opinion, right? If you only see these trades once or twice a month, I mean, unless you have super large bankroll or you're going all in, it's not really feasible. You know, so for me, in my approach, I err on the side of day trading, and I'm looking for capitalization of intraday speculation. So I'm looking to make my money intraday every day if I can. Of course, that doesn't mean we have to trade every day, but I'm going to be here every day in search of what I think is an acceptable trade. TS says, Micah Yo, do you ever either use borrow aspects of the short bear mad system for trading, or do you stay true to your approach only? I'm trying to figure out how to approach all systems to show real merit. Thanks for your question, TS, and good morning. Nice to see you, as always. You're always dropping some good questions. So, Max's style is, it's a very advanced tape reading style. So Max is like a master at tape reading. I've worked with Max on and off for years. We're friends outside the market too. Very good guy. What I like about Max's trading is that it's precise, it's systematic like mine. So we have that in common. We're not traders that shoot from the hip. We don't shoot from the hip. We see a chart, we know exactly what we're looking for because we have golden rules. We have our rules. You know, Max can look at a Chris chart and I can look at a Chris chart, and if we were to have like a hidden questionnaire our answers would probably be strikingly similar for what we think the stock is, for what our approach on the stock would be. That being said, like I said, Max is heavily reliant upon the tape. He's like a master at tape reading. So he's using support and resistance on the chart that he sees are very important areas of interest, and then he has the tape confirm what he's looking for in a trade. So he may have, let's say on Chris, for example, he may have had a 280 area of resistance, which we could see is that's feasible. You know, that's not it's not absurd to say. I think 280 was also a pretty good area of resistance, but he won't just take the resistance on the chart. He's looking for the tape to confirm, and then his master scalping ninja skills get him in and out, you know, sometimes before the rest of us, and he's already banked. So his approach is really awesome, and I value his approach a lot. The short bear, I've actually been working with him for a little bit, and I'm learning more about his style and his approach. But I can tell you that I have a pretty good amount of experience in the market. Of course, I'm not a professional, I'm not a millionaire, but I have a pretty good amount of experience in the market, and I value and respect the short bear's approach to trading, although again, it is not exactly what I'm doing, which is great, because like I always say, my approach is not the right approach. It's not the best approach, it's just mine. So sometimes I pick things up from Max, sometimes I pick things up from other traders. I'm on this journey the same as you guys are. I'm no better than you guys. I may just be a little bit more experienced in some areas. So Lucas, our other moderator, the short bear, he is heavily reliant upon fundamentals, and he's a whiz. You know, he's a whiz. He's on BAMSEC and other websites, you know, and he could find what he needs to find oftentimes within a few minutes. And it's awesome. It's refreshing because I don't use fundamentals a lot in my approach, admittedly, and neither does Max, you know. So and then when it comes to myself, I'm a math-based trader. I guess that's the easiest way to explain it. I started off in the Fibonacci, and I also added in some Fourier transform into my analysis. And after that, after a long time of studying the ins and outs of these price equations, I started to notice some similarities in the absence of price in the sea of the market, in the universe that we call the market, in this vast ocean of numbers. I started to notice patterns in price in these equations, and I'm able to calculate, basically reverse engineer this calculation, and then it'll spit out a number to me, and that's very likely the area that that price will fade at. It's different than what I see a lot of people doing. Like I always say, it's not the best approach, it's just mine. There's, you know, there's a lot of requests for me to like post a number on a stock, and that's why I always do. I said 283 on Chris. You guys can see what happened around 283. It totally collapsed. I've done that on many stocks over the last few months for you guys live, and I will continue to. And it's not bragging because I lose too. It's more of just showing you guys that there's other approaches. You know, there's other ways, so many ways to successfully speculate in the market. There are guys that are purely fundamental traders. You know, I'd say like maybe 90% fundamentals, and then they just use very basic technicals to enter and exit on the breakdown or breakout. But their plays are fueled upon catalysts, the catalyst of companies, and that's awesome. Some of these guys are making bank. You know, that's just not what I do. Everyone has their style. You know what I mean? So I don't look at tape when I'm trading. But for me to say that tape is not important would just be a joke. I mean, Max is heavily tape biased, and he's up over $100,000 in the month. How could I say that tape is not important? It's very important. It's just not something that resonates with me as a trader as much as Fibonacci does. So I'm lost in the numbers. I'm lost in the sequences. Lucas is lost in the filings. You know, that's what's great about this room, is that there's so many different forms of analysis that you guys can come in and speak to us and learn about. And it's not bland. It's not plain Jane. It's, you know, we're not all saying, oh, look at the VWAP. I mean, when do you ever see any of us say that? That's so basic and rudimentary, and it's just not something that I think is very important, in my non-professional opinion. Like I always say, I don't use the VWAP or any indicator to base my executions upon. I'm looking at the VWAP to help me identify the healthiness or unhealthiness of a trend. So I'm not trading around the VWAP, and you know, I think if people are trading around the VWAP, that's fine. You know, follow your plan. Don't follow anyone else's plan except for your proven approach. Opro says, I see. Thank you, man. TS, how can us non-math guys get started in the math approach? It seems pretty high technical. Where do we start? Thanks. So I've posted before a little bit about my approach to price sequencing, which is what I've called it, what I've named it, I guess. Looking for sequences in price. I have also posted a few books in the main chat. It was pretty late at night, so I don't know if everyone saw it, but I posted a few books on Fibonacci and stuff that I think are important to read. They are not affiliate links. You guys can buy them or rent them, or however you get your hands on them, that's fine. But I will post that again this week so you guys can start your own journey down the rabbit hole of math, the proverbial rabbit hole of math that is seemingly endless. Okay. Wallball, you got it? You with us now? Sorry, I was ranting. TS says, maybe a channel for books. You know what? I think that's a great idea, TS. I think that's a really great idea. Maybe we'll do that. Miko says he was going to suggest the same thing. Great minds think alike. I think we'll do that. Okay, so we talked about Chris. The next thing I want to talk about is steel. Now, we have a high of day of roughly 280 on steel. I told you guys that I really want 298. I don't believe that steel is going to stop at 280. Probabilities in my data and analysis say that steel will probably get to 298 area before dying. So I said that in pre-market, and that's something that is still in play for me. So steel, 298. That's where I'd like to see it before I attempt to short on it. I just really don't think that it's feasible to short it here in my own approach. And on Chris, 266, 267. That's still where I want to see it. I don't have any business shorting it down here. This is absolutely chasing. I mean, on a move like this, the stock gapped from 140 to 3, right? So it's not a BPTH situation where we have a massive range to capitalize on. So maybe shorting lows might be more feasible on a stock like that, if that's your strategy. But, you know, 141 was the low on, what, Friday? 188. So guys, just, you know, take a quick little measuring tool. 141 is 47 cents away, and the high of 3 is $1.11 away. Does that really sound like a great risk to reward? I mean, for me, it doesn't. So what happens if I short it down here at 188? What am I looking to make? 10, 15, 20? I mean, what? Not even. I don't see that being feasible. I don't know. But look at all the risk that I have up above. All the way from 2 to 3. You know, what am I going to keep doing? Adding into all the resistances until I get to that 266, 267 level? No, I mean, it's not feasible. In my approach, it's not feasible. So I just got to walk away. I gotta say, hey, you know, and what I do in my own trading is I set a price alert. So I'm going to set a price alert, and, you know, I'm going to set it for 250. And if price can break 250, it'll alert me. And then I'll look at it. I'll look at the volume. I'll look at what it's doing, maybe borrow it if it's available. And then if it can get to my 266, 267 in the future, then I'll attack it there at that point. But, hey, on to the next one. I can't do anything else with this. I can't, you know, you're trying to make lemonade with an already squeezed lemon. Doesn't really equate to very good lemonade, in my opinion. Right? We're trying to take the lemons out of the garbage that are already squeezed, and we're trying to squeeze more out of them. Just take, you know, that saying, take what the market gives you. You know, when you try to get greedy or try to force trades, you know, revenge trade, I mean, man, shorting down here at 187, 188, gosh, I almost want to say that it's going to go up from here, even though I have no metrics to tell, you know, but very small chance that it continues lower, very high chance that at some point it'll bounce into a resistance level, and that's where I'd want to be. So Miko says he loves the analogy. Thanks, man. So that's really all I have to discuss today. I'm still waiting on seal. That's something that I'm looking at, and that's really it. I mean, like I said in the beginning of the show, very, very, very big difference between last week and this week, as far as volume and range and liquidity are concerned. Okay, guys, so when we started this Micah Yo Show, AXSM was still below 5-year highs, and now it's broken the highs. So, like I said, it has a very high chance of breaking into new highs, and it just did that. So, I'm going to release this on YouTube. Excuse me, I'm going to release this on YouTube to help others identify how I gauge strength and weakness, front side, back side, relative strength, relative weakness, and it was really good to see it on AXSM live here. So that's how I do it. That's, you know, I don't have a crystal ball. It's just a law of probabilities. You know, so we outlined why I thought it was going to go higher, and it did. So I hope that was helpful to you guys. If you guys have any other questions for me, please ask them now, and if not, then we're gonna just continue on with our day here and wait for something to come into play. Thanks for the suggestions, TS and Miko. We will we'll add a book channel. I think that'll be beneficial for everyone. Stock Slipper says, great show, Micah. Thank you, and welcome to Matt Has Money. MRH, nice to see you. Thank you. Frog, thanks, Micah. Really appreciate your sharing and honesty. Glad I joined and looking forward to learning a lot from everyone and be studying. Thank you so much and welcome, man. TS, thanks for the talk today. Very helpful as usual. Chase back. Feel better. Thank you. Man, Windy City, Chicago. Better be prepared for the weather if you're coming here. I appreciate all you guys coming and tuning in and listening to the podcast. And I'm going to release it on YouTube later. And if you guys want to support me and support the channel, please give a thumbs up on the video. That helps a lot. Just takes a second. Computer guy, thanks for answering my question this morning. Really appreciate it. Guys, of course, I'm always going to answer questions. Please reach out to me. It just takes a second. Just tag me or reach out to me privately and I'll get back to you. If I ever miss a question or anything, I honestly just didn't see it or I got caught up with something. You know, we have a lot of members in here and I get questions all day and I answer everyone the quickest that I can. But if I miss you, please just, you know, bump it. You know, say bump or hey, you know, got a second? Can you answer this for me or whatever? And there's no hard feelings at all. It's just that I honestly just missed you and I missed the question and then I got, you know, like we always say, when the market is open and we get a question, we try to get back as quickly as possible. But you know, if you're in the middle of a trade, it's hard at the time. So we always try to go back and see what we missed. So guys, thank you so much for being here. We're gonna end it here and release it to YouTube. Like I said, if you appreciate the Micah Yo Show and you want to show your support, please leave a thumbs up on YouTube and share it if you think it'll value someone else in their journey. Okay? So thank you all for being here. I will see you guys later today. Hopefully CO gives us a midday or end of day pop. And AXSM, just gonna let it run. Maybe we'll get a nice short on it in a week or two. What else? Chris, you guys know I'm still looking for that 266, 267 area. And we'll just be patient until then, okay? Thank you all for being here. I'll see you guys later.